You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTer Schwartz from CBOE. The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is Thursday. It is noon Central. It is 1 p.m. Eastern. Do you know what's rocking in these markets? Well, I guess we'll find out together because it's time for everyone's favorite bi-weekly options extravaganza known around the globe as the Option Block. My name, of course, Mark Longo from the TAG. Don't forget the optionsinsider.com, the place to go for a lot of great news and articles and alerts and fun things that go on in between episodes of the show. I know there's a lot of shows coming at you. So you made us think we're all about the shows. And we do have a lot of shows, but also great content, most actives. A lot of you folks just devour the most actives. You love that stuff. Put those out twice a day for you because we kind of like you, as well as a whole bunch of other great stuff. Great earnings vol analysis. Not getting that anywhere else. Certainly not for free. One place to go for all that fun. TheOptionsInsider.com is the place to go. While you're there, might as well kick the tires on the pro while you're at it. /pro. Get past that velvet rope. Awesome pro Q&A. Just that Scott Nation's in the old hot seat. We can't keep that guy out of the hot seat. He would be there every week if we'd let him. He loves answering your questions about vol. He's obsessed with it. So he's a great one to ask. A lot of great questions there. Of course, we have Options Oddities coming up tomorrow after vol views. If you don't want your party to end with vol views, that's the place you got to go. TheOptionsInsider.com/pro. Kick the tires and light the fires and have a good time while you're at it. Speaking of good times, let's have one here on the show today. Let's see who's joining me for this bi-weekly options party. First, let's go out to CBOE East. You know, he was sitting right next to me last week. I could poke him. It was fun. He was right there in the flesh. This week, back via the magic of the internet, where we are joined once again by the FLOWMASTER himself, Mr. Henry Schwartz from CBOE. Mr. FLOWMASTER, I say CBOE East, but I don't know where you're beaming in from. Where are you beaming in from this week, sir?
I am in our 17th State Street headquarters in, our New York office. So, yes, I'm in the regular location. I'm happy to be with you. And, just listening to the disclaimer, I used to give you a lot of grief because I'd have to fast forward like the first minute or two when I was listening to your podcasts.
And now it's your fault. Now it's all your fault.
I do have to apologize. I think that they may have upped the disclaimers because of the things that I talk about. So I'm sorry about that. But, hopefully all the listeners know how to find the fast forward button. And just like any other commercial, they can just skip.
There is a skip button at the beginning, listeners. But the nice thing for you, because we like you folks, it's all front loaded right there at the beginning. So if you want to skip it, you can. And then you got an hour of show coming at you. We don't put shows in the middle. There's no B-roll or anything like that. We're coming at you for an hour of goodness. So if you want to get past that, I get it. To each their own. Some people like to listen at 2x, 3x speed. I think I would sound like a chipmunk at that speed, but hey, if that's what floats your boat, we don't judge here at the end of the day. You know who will judge you, though, because he's always judging. He is the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to ye old program, sir.
It is great to be back. I was trying on that disclaimer. I was just trying to see which one's longer, one of those Wegovy, one of those fat drug ads, or the CBOE. I think it was kind of a race there. Who had the longer?
I will say Henry does not come with a risk of death the way most of those drugs do.
Henry just has to say, "Hey, I've been trading for 40 years. Don't do what I do." And there you go. There's your disclaimer. It's easy. Don't do what I do.
My favorite in those drug ads is may have a side effect including death. That's a pretty big side effect, I think. If that's one of the, maybe the mother of all side effects. Maybe you should lead with that. But
our display could be: you could lose a couple bucks. You could.
My other favorite is: don't take this drug if you are allergic to this drug. I'm like, well, how are you supposed to know that until you take the drug? So yes, we could have a whole extra hour on just pharmaceutical disclaimers. I think our audience would love that. Instead, let's go around the horn to welcome in, fashionably late as always. Listeners, I joke about the uncleist of Mike's a happy dude. He's really the biggest prima donna of the bunch. He's got to be featured last. He needs the spotlight. So here you go, the uncleist of Mike's, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Welcome to the show. Glad you could grace us with your presence, sir.
Hey, it's all about me.
That it is. As we keep on rolling, let's make it about the markets, shall we, listeners, as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, listeners, let's get to it. And right as the show kicked off, listeners, we were balanced right on the edge of the knife, right on the head of the pin. Exactly 4,500. We have dipped below it a little bit now. We were hanging right there. You knew with that level, that psychologically significant of a level, we just had a great episode with our buddy Blue Putnam on TWIFO a week or two ago, talking about the economic significance of round numbers like that and how impactful they are. Check it out if you haven't listened to it. It was pretty fascinating. Listen, if I do say so myself. But you knew you couldn't hang out at 4,500 all day. You had to go somewhere from there. Right now, we are a couple of handles below it. Will this kick off the massive sell-off? I mean, we were threatening 4,100 not that long ago. 4 shows ago, maybe 6. And now here we are, 400 handles higher. I don't know. Maybe I'm just not the optimistic fellow, but is that sustainable? That level of explosive upside? Probably not. Are you going to give some back today? Who knows? We're just kind of vacillating right now, off a little over a tenth, about 0.15% in the S&P. Who knows? In 2 minutes, we could rally another 2% out there. This market is crazy. It's insane times out there. We're all living through them together. That's why the show is here for you listeners. We can all hold hands and fight through the madness together. Dow off about 1/3%, the NASDAQ off about 0.15%. I might as well throw into the mix our old friend small caps as well, because, man, what a roller coaster. You could do another hour just on small caps. I mean, they were up nearly 5% just one day this week. I mean, a major index like that, 5%? These are the things we're getting now, listeners. It's off nearly 2% today, 1 3/4%. So the small caps giveth and the small caps taketh away. Man, There has been a growing chorus of research and analysis just talking about maybe some of that decoupling with small caps and what's going on small caps versus large caps, just from a correlation and vol perspective. There's a lot to unpack there as well. So yes, if you're looking at small caps right now, you're settling in for the roller coaster ride. VVIX, the vol of vol, looking a little bit frothier from the Monday show. 84 up 2 points from Monday. VXX at a 19 even, down about 2/3 of a point. UVXY, UVIXY, as some folks like to call it. Also having a surprising showing in our poll last week. Maybe we'll get to that a little bit later. We'll definitely get to it tomorrow on Vol Views. But the UVXY contingent coming out in force. UVIXY, as some folks, I still can't get used to it. UVXY, that's what I call it. 11.5, down about half a point. SVIX, 3160, up about 0.8 of a point. And good old UVIX, the ever-eroding one, 2140, down a little over one, about 1.2 points from where it was on the Monday show. All right, a lot to unpack. Let's go around the horn the way we started, because he likes to be last, the Uncle List of Mikes. Let's go out to CBOE East first. Mr. Flowmaster, another crazy week, another wild week. What was catching your eye out there, sir?
Well, I have to agree. It's been kind of a stupendous bounce off of the bottom. Last night I was trying to write up some notes, and you go back 3 weeks, not even October 27th. It took 2.5 weeks ago, and we were looking at a VIX around 20 something, and as you said, like SPX around 4,100, and a couple weeks later, I mean, man, imagine how you'd feel if you just kind of sat out the last couple of weeks and were not invested. And I think that the popular narrative is that, we got the data points that show that a soft landing is much more possible. And if that happens, maybe interest rates will start to come down. And, sentiment turned so quickly, and the run-ups were really, really sharp. And it's one of these, it's a great kind of trading environment. It's also a nice lesson on, we can, people tend to focus on downside concerns, right? Like, oh man, if the market crashes tomorrow. But, what we've seen for the last few years is, especially since the COVID bottom, that we've seen more violent up moves and down moves. There's a trader I really like, Dean Kern out of Macro Risk, who actually does some work in dividing, taking realized volatility and basically calculating it for up moves separately from down moves, and thinking about things that way. And I think it's actually a really interesting way to look at things, right? Rather than just saying, okay, fine, the market is swinging 1.5% on average over a period of time. So, we've got this realized volatility of X, but to be able to say, no, what's happening is the up days are bigger than the down days. And, the past performance never predicts future, but it does kind of tell you the way that people are behaving and that the market's behaving. So I just think it's been a really interesting little period here. We went from what was kind of turning into like a, still an okay year, but a little bit more of a meh, to, wow, we're going to have another, 14, 15% S&P year. Which, right now puts everybody in good moods. I'm just trying to really try to think a little bit ahead. And, if we went from the bleakest sentiment that we'd seen in a while 2 weeks ago to now all of a sudden, what looks to me to be one of the most bullish kind of sentiments I've seen in a while, you don't always want to get sucked into that too deeply.
Just a few weeks on the show ago, you were coming on kind of depressed. You were like, oh, this is terrible. You were feeling it, sir. You were a manifestation of the sentiment of a lot of our listeners. And here we are a couple of weeks later, and the FlowMaster, just all is right with the world, listeners, just hunky-dory out there. So there you go. What a difference a couple of weeks and, 400 handles in the S&P can make. Let's keep rolling. Let's go out to the land where he's never happy. Things are never hunky-dory. It's the dark and stormy shores of Maine. How can he be happy? Everything around him is a swirling vortex of death and destruction. Luckily for you, his internet holds out so he can appear on a show like this. Mr. Rock Lobster, sir, what's catching your eye out there? And it seems like a modest red day, sir.
Yeah, I mean, I do have agreements with Central Maine Power to make sure I am allocated internet access for this 1, 2 to 3 hours per week just for the show, just so I can beam in for the show. It was no small feat doing that.
We
in this
appreciate
banana
your
republic known
efforts
as
on
Maine.
the behalf of our audience, sir.
Yes, just for the listeners. I would, you know what, today I want to almost say like party like it's 1999. Intel up 5%. Microsoft up 1.4%. Now I have to say, on the flip side, and just TOSAW, cover your ears. Cisco is down 6%. So like a lot of the big movers in the queue are, 25, 30, 40-year-old names, which I find interesting, to say the least. I don't know why they're like Intel all of a sudden. Are they making AI chips or something like that? AMD is up a bunch. So, and of course, Apple is making a little bit of run today as well. So even though it has like no revenue growth, apparently people still like it, or they just don't know what else to buy. So you got that. So that's number one. I find even though we've had this pretty good run up, same thing I tell my students, like you can think that the market should go down, but if it's not going down, how much money do you want to waste waiting to be right? So just have a little memory on that, So I think the biggest narrative was the Fed continuing or having to continue to raise, and then you got this, relatively what I would say let's just call them inline inflation numbers. And so everybody, okay, well, maybe the Fed doesn't have to raise, and the bond market will do it for them so the Treasury tries to issue a debt, and like what prices are they going to get? So I think maybe we'll see a little less out of government statistics and waiting for the Fed to raise. And it'll be more like, how are those bond auctions going? And who's buying stuff like. So I think I think there could be a little more volatility around the auctions, to be quite honest. So I'm looking at that. We have a bond trader at Option Pit who's very good. So like maybe I think you pivot to the next vol events being around those type, the auctions, how they're going, especially the big ones. As the Treasury has an gaping maw to issue debt in the foreseeable future. So you got that going on. As far as the rest of the economy goes, and I think TOSAW, we've talked about this. I think it's like the post-COVID high still, The economy is doing pretty good before COVID. And then we had the COVID and everybody got thrown out of work. And now everybody is going back to work, and things are just going back to where they were, which is going to look like economic recovery, but it's actually more of the same. I don't think a lot of the numbers are a whole lot better. The only number that's much, much bigger is government spending, from what I could tell, 40% higher than pre-COVID levels. And we're not doing the COVID thing anymore. So I don't know where all that money's going. Probably interest expense. So as far as like the U.S. economy working, I think it's working. I think there's like AI thing is good. And we could end up with a pretty, decent year after which was a pretty solid sell-off last year. And as of right now, like I said, I think more of the volatility will be around the auctions when they come, because I think people are pretty good with where it seems like this level is about summer high, so they're okay with this level. Now, if the Fed doesn't theoretically have to raise, the bond market is going to do all the raising that they need. So I'm kind of on the, I'll just jump on the bandwagon and go Santa Claus rally camp, and see if maybe we could get a little bit more of the rest of the market to participate a little more, at least as healthily as the big Q stocks that have ran this year. So, I mean, those are up a ton for the year. It would be nice to see a bunch of other stocks doing something similar here running to the end of the year. So that's kind of that's sort of how I see it for this week on, as the vol comes out into Thanksgiving, the Thanksgiving holiday. So, but VIX didn't look like it wants to move, and the December contract is so compressed already because of all the days that are coming out, that I don't know how much movement we're going to get out of VIX for the next week or so. But at least from a future point of view, they're kind of stuck where they are, I think, in the short term, unless we have adverse news.
And last but not least, the prima donna himself, the uncleist of Mikes, Mr. Uncle Mike, sir. What is catching your eye out there you can't complain. It has been an Uncle Mike couple of weeks, even if today taking a little bit off the top, sir.
Well, I mean, a 3-point drop in the SPX or whatever it is today, I think I can handle that.
I think you can stomach it, sir.
I think I can. But, in looking at this, we might be making a run for the 4,600 level by the end of the year now, and that's the all-time highs. That's what we peaked out at. Or I'm sorry, not the all-time highs. The highs of the year, I should say. But we may make a run for 4,600 by the end of the year. We peaked out at that in July. And we might be doing that over the course of the next few weeks. Now, we still have a ways to go before the all-time highs, just north of the 4,800 level. I believe it was the first day of trading of 2022. But we got a shot at it. In terms of some things that are catching my eye, if you will, bonds continue to rally, and that we have some. I guess that everything is awesome now with the Fed. They say something minorly dovish, and so now we're going to rally. So nothing wrong with that. And I think ultimately what the market's telling us is maybe the sell-off in the bond world was a little bit out of fear and not a lot out of what was actually happening, or there's a lot of fear that we were going to continue to raise rates and continue to have this excessive inflation. But bonds are kind of funny in that you're at this stage of the game, you're one announcement away from a total reversal on it. And so for the bondholders out there, that can be a good thing. In terms of some individual names, like what Andrew was saying, it does feel like the 1999 party, if you will. Microsoft is the one that's catching my eye the most with the 1.5% gain on it. And then, of course, tech is actually moving things as they do. And like we've talked about this on the show before, it's difficult to have a bull market if you don't have progress in the tech space. And so with that, we are getting some moves out of tech today, so that can be a good thing. But in terms of what's dragging things down, me being the Debbie Downer with which I am on everything, it was the slippery stuff, energy. So I guess it's maybe slippery and gassy, whatever way you want to look at it. Looking at XLE, the sector ETF, that's down almost 3% on the day. And so when looking at that, that is the only thing of the major sectors today that's really holding this market back from having at least some sort of upside, but having it be flat or not a lot of a move today. Can't complain too much with what we have actually had. And that's what I'm seeing today.
Let's see what we're seeing out there from a broad volume perspective. Let's fire up the old FlowMaster machine and see what it's catching its eye, I should say, out there today. Let's start in the major indexes as we are wont to do, listeners. Out there in VIX land, kind of a bit of a shrug your shoulders kind of day. It's not nothing. Certainly when you see that the ADV has continued to come in, we're back below 800K, 780 right now. So in that reduced context, 345,000 contracts, nothing to sneeze at. We're almost to halfway to the ADV. And again, we are heading into a holiday week, so I think we can have some reduced volume expectations coming for next week. So in that light, I'm sure all these ADVs are probably going to come in, unless, of course, now that I say that, we'll get some crazy banger announcement from the Fed or something, and bam, off to the races. But that said, past his prologue, we're probably going to see lighter markets for the rest of this week into next week. SPY at about 4.5 million right now. The ADV is 9 million, so pretty much exactly halfway to its ADV, so right where we expect it to be. The S, 1.8 million. The ADV, about 3.5 million. So the S right around halfway to its ADV as well. So both of those trucking along like clockwork there. Small caps, again, kind of the beast. We joke about UVIX being a beast, but small caps kind of a bit of an unhinged beast as well these days. 1.25 million already today. And again, we mentioned small caps taking a turn to the dark side. So I guess if you want a little bit of a walk on the wild side, maybe UVIX, maybe a little bit too crazy for your blood, allow me to present small caps. You'll certainly get your blood pumping a little bit out there. The ADV right now, almost 1.9 million. Again, that's a heck of a lot of paper, but then you see we're already at 1.25 million right now. You also see that it moved nearly 5% in one session this week. you can see why those numbers are warranted. And then the Qs bringing up the rear, 2.1 million. The ADV about 4.15 million, so right around halfway for its ADV as well. So mostly in line with expectations on the broad macro side. How about single names? They've been kind of a laggard of late. We haven't seen a lot of banger single name days. Is today one of those days? And the answer is kinda. It's respectable. 271,000 is what it cost you to break into the top 10 today, listeners. That is nothing to sneeze at, especially when we've been seeing days $150, $160, $170 lately. This is fully 100,000 more than that, so that's nothing to sneeze at. That gets us to our friend SoFi. SoFi apparently screwing the pooch today, off about 2/3 of a point, or nearly 9%, trading right around 6 3/4. This has been a fascinating one to watch this year. Of course, it came under a lot of scrutiny earlier this year with all the contagion fears. A year ago in the November-December timeframe, it was trading around $4.50. They got back to those levels again in the post-contagion era, and then they rocketed it up from about 4 3/4 in May all the way up to its high for the year in July of $11.70. Obviously, we are exactly $5 off that high now. It's $6.70 right now. So it's been a very topsy-turvy year out here for SoFi. And again, number 10, 271,000. Number 9, Uncle Mike. Maybe you should do something else for a minute, because number 9 is your old nemesis rearing its ugly head yet again. This goes back to what the Rock Lobster was saying. It's 1999 all over again. Intel, Cisco, just all these names that were the hot names. I had to sleep over on the floor of the CBOE, listeners, to get a spot in the Intel pit. Think about that. The madness that today that would be NVIDIA or something. But yeah, craziness out there. Cisco off 6 handles, trading 47.20, off 11.5%. So apparently things are not good on the digital communication side for Cisco out there. Man, they are crushing that. Let's just look on the year here really quickly. What's been up with Cisco? And you know what? Cisco was feeling the love. A year ago was trading pretty much exactly where it is right now. So this year, it just gave away out their whole year right now. It was trading $47.50 a year ago. And then they hit it in the contagion down to about $45. And they took it up in September. They hit about 58, and that was the high for the year. They were still hanging out at about 53 just yesterday until all this came about. And then bam, right back down. The whole year is now gone. So Cisco unched on the year pretty much, which is actually down now, but down almost $1. So yeah, rough year for Cisco. Maybe Uncle Mike is celebrating that. I don't know. He seems like a little bit of a schadenfreude kind of guy. Number 9, Cisco, 308,000. I'm just throwing barbs left and right today. AMD, number 8, 385,000. Chip zone coming early. 120 exactly for AMD. Up $2 exactly. So a nice round number day here. Our buddy Blue would like that. And again, good for number 8, 385,000. Number 7, my old stomping grounds, Intel. Look at this. So number 8, we go to number 7, 515,000. So this is a pretty beefy, dense day from a volume perspective, listeners. Intel. When was the last time we talked about Intel on this show? It's been quite a while. 515,000 contracts. Intel up a little over $2, trading 42 2/3, up about 5% today. So quite the story on the year. Let's see. Intel is up about 16 handles, or about 60%. So a good year for old tech, apparently. Everyone's loving Intel again. Intriguing. Good old times. All right, let's go to number 6, from kind of old school economy to what is a newer name. A lot of people use it as a proxy for China now. It is Baba, 518,000. I'm not surprised we see Baba up there. Number 6, 518,000. Baba, my goodness. Screwing the pooch out there as well. 78.90 off 8.15, or 9.33%. So apparently all is not right with China again. Another name that is pretty much almost given up their year. In fact, they have. A year ago, it was $78.16. They rallied it up all the way to $121. That was in January. So it kicked off the year actually pretty much at its apex. And then it's pretty much spent the rest of the year giving it back. And it gave up the last bit today. We are pretty much now close to it's up slightly, up about 1% on the year, but still, wow, what a topsy-turvy year for Baba. Number 6 today, 518,000. Number 5, keeping it old school, listeners. It's Microsoft. Old school, though, but it's new again. They're the tip of the AI spear. They're buying up every name in gaming. So Microsoft has some newer flavors. It's not just Windows anymore, listeners, and Office. 375 3/4, up $6, or 1.6%. What is the news in Microsoft? More buyers than sellers, apparently. I think there's some chat GPT from that's every day that ends in Y now. Number 5, 530,000 contracts. Number 4, keeping it in the tech names this time a little bit, well, not quite new school. This was a .com name as well, so you could put this in the 1999 camp as well. I remember walking onto the floor of CBOE and have how many people telling me, oh, that Amazon, man, they're burning through cash. They're going to be gone in 6 months, and after 6 months, they're going to be gone in another 6 months. And that talk continued for years until here we are today. Amazon 142 3/4 off about $0.50 today. Good for number 4, 550,000 contracts. Number 3, you knew we were going to get there, listeners. Just maybe not at number 3. It's NVIDIA. NVIDIA up about 220, trading 491.07. 720,000 contracts on the tape for NVIDIA. So they're popping today from a volume perspective and an underlying perspective. Number 2 is the fruit company, 189.12. Man, they have recovered nicely from that sub 170 they were at not too long ago. Not quite at 52-week highs, but about 9 handles away, up a little over $1 today. Good for 869,000 contracts. That means the big dog, you know what it is. It's Tesla, looking pretty beefy again today. 1.81 million contracts. Tesla giving back a lot of what they gained recently. 233, almost 234, off nearly 9 handles today. Again, you know, day the ends in Y, it's up 4%, it's down 3%. That's kind of just the name of the game in Tesla land. Looking at the earnings front, things are still pretty hot and heavy, listeners. We had some big names popping off. We have hot off the presses some earnings move results for you. We'll get to some really quickly, then we'll unleash the eye of the FLOWMASTER, see what he's keeping an eye on. Again, cover your ears, Mr. Uncle Mike. Cisco, after the bell yesterday, they went into their announcement 53 1/4. I think you know how this one played out. They were pricing in 4.4%. Spoiler alert, listeners, they outperformed that to the dark side. Off when we ran this report this morning, 11.5%. They're still right around 11.5%. So they're closing in on 3x their straddle. That is nothing to sneeze at. We were saying before, more vol seems to be the order of the day. It also seems to be the winning trade right now this season. And Cisco, at least, living up to that. Walmart before the bell. Walmart, a big one because they're seen by many as obviously a bellwether for what's going on in the economy. 169 3/4. They were pricing in 3.2%. They delivered 7.5% to the downside, and they're off about 7 2/3% right now. So, yeah, Walmart, another one outperforming. Baba, you know the deal. 87 is where they were going into their announcement. They were pricing in 5%. They delivered 9.6%, at least in the initial earnings blush. Right now, they're off about the same level, about 9.4%. So, yeah, a lot to unpack out there, listeners. We also had Macy's before the bell. They're talking about different flavors of the retail world. 1261 was where they were going into their announcement. They were pricing in 11.6%. They're the rare name that underperformed, listeners. They only delivered about 7.5%. Macy's up about 5% right now, or about 62 cents right now. So Macy's having a decent day, managing to buck the trend. Got big names popping off later, listeners. Got AMAT after the bell. 155 1/3 is where they were trading. They were pricing in $6. In the past, they moved $4.50. So obviously the folks at AMAT got the memo that more vol is what the cool kids are doing this cycle. BJ's staying on the wholesale side, 17th before the bell. 71 1/2 is where they were trading. They were pricing in $4.86. In the past, they've moved $4.87. So exactly in line with prior history. Maybe they didn't get the memo out there in BJ's. Zoom, man, this one, what a darling this one was for a while, right? 20th after the bell, 63 3/4 is where they were trading. They were pricing in 5 3/4. In the past, they moved about 5 1/3. So a little bit extra juice, but not a ton out there, listeners. And lest we forget them too, it is that season. Let's hit Best Buy as well. They're the 21st before the bell. 68.88 is where they were trading. They're pricing in about $4.50. In the past, they've moved $4.12. So a little bit extra juice out there in Best Buy as well. The season, listeners, hanging out at 112%. So still looking frothy, still looking robust, still above our long-term average going back about 3 years of 100% right now. Remember, if you want to see all that data for yourselves, only one place to go, theoptionsinsider.com. Click on the Options News and Articles tab, and then it's all there for you, completely for free, because we like you folks. And you know what else? Because we like you folks, it's time to unleash the FLOWMASTER on some fun flow for you folks, because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild. On the Thursday edition, we welcome on the FLOWMASTER to get even weirder, to get even wilder. And I ask you, listeners, does it get weirder? Does it get wilder than Argentinian financial services? I think not, because we're kicking things off in everyone's favorite, Grupo Financiero Galicia S.A., a.k.a. GGAL, ticker symbol GGAL, Argentinian. Financial services trading right around $12, pretty much unched on the day, so not an action-packed day. On the year, though, different story. They're trading about $7.40 a year ago, so up $4.50 or 61%. So it's been a nice run. They are off their highs, though. Their highs came in late August, 1864. So kind of a tale of two glasses here. Glass half full first 2/3 of the year. If you bought it in late August, you're maybe looking at a very glass half empty right now. But either way, an intriguing stuff and still up on the year net. So fascinating stuff. Mr. FLOWMASTER, sir, I know you can't get enough of the Argentinian banking sector. What is catching your eye out there in GGAL today, sir?
Yeah, I don't know if I've ever looked at this ticker before, but it did jump out at me with heavy volume and a call to put ratio of about 1,200 to 1, which basically means you get about 13,000 calls trading and 11 puts. Very lopsided flow. The bulk of it was a print of 8,700 of the December 14 calls bought for 45 cents in an auction. And that a few of them traded later, like just a few minutes later, up to 60 cents and 55 cents. So some kind of aggressive call buying in there. Yeah, this is $2 above spot. They expire in really just about a month. And the name I believe it has earnings next week. So there's some stuff happening in there. I don't know what the financial, predicament of the company is or anything like that. But I did actually just kind of been poking around. I also looked at what the open interest changes were. And it looks like about 11,000 of the December 15 calls were bought yesterday. So this is kind of compelling. To me, yesterday they paid 32 to 33 cents for these D15s, and that was also a customer opening buyer. So if you look at the open interest now, you got about 67,000 calls open, and the bulk of them are these D15s, these D14s which traded today, and there's actually some January even further up to the 20s and 25s. That might be a little bit older part of the spread or something, but this looks to me like something with some upside potential. And I don't have any data to support it, but I also kind of believe that some of these foreign stocks that trade in U.S. ADRs can be a little bit more susceptible to information leakage or something going on. So I would lean long this name kind of one way or another, just because it's a lot of call buying that somebody has undertaken.
That's a good point. We always talk about the utility of options flow and how predictive it can be or sometimes can't be. And a lot of studies bear that out. But I don't think anyone's broken it down in the ADR side. I think that'd be a fascinating addendum to a study, Mr. FLOWMASTERs. Is there, shall we say, a little bit more information leakage outside the U.S. Than there is here? I wouldn't be surprised to see that is exactly the case, as you said. So intriguing stuff. We have talked about GGAL before, but it has been quite some time. Mr. FLOWMASTER, Mr. Rock Lobster, do you recall talking about GGAL in the past? And then what are your thoughts? Are you down with the FLOWMASTER that you think maybe there might be some grist for the mill in this GGAL upside?
Well, it does stand out. And like, if it's an Argentinian financial company, isn't it just some like inflation flim-flammery stuff? Because, isn't that their number one export? I guess that's their number one import is inflation.
The number one domestic issue, probably.
And I should talk because I guess we're on the path. But didn't we look at one this week like XL or something? Didn't we cover? It wasn't XL like Brazil financial company. XP. I thought there was some paper in that earlier.
It was XP. XP on the Monday show. Yeah, they bought a bunch of puts.
Oh, okay. So this is the opposite, right? We thought that it was like on the bubble. Was it a line of the sand put? And then no, it looked like they bought the puts and now they're buying calls. I don't know. I don't know why you would buy those puts in XP. I could see if there's somebody's looking for a big swing in GGAL, but I don't know. if that paper in XP was more bearish, like because they're going South American financials, it's hard for them to, you feel like they're disconnected. But this paper definitely looks, definitely looks bullish. So I was just looking at all the like the paper went up at 8,000, and like it appears to be like the early buyer is correct. Like the early buyer was paying 45 cents and now they're trading 65. So, I mean, it has all the look of the liquidity provider kind of not feeling no bueno right now, I would say.
Yeah, the puts we talked about, I was going to bring them up today on the show because it seems like we probably know how they're going to work out, even though they haven't expired. We talked about on Monday, Put Palooza in XP listeners. Again, not Argentinian, but Brazilian financial services. With the stock around $22, heading right into earnings that same day, someone loaded up on 21,000 of the 20 half puts. They paid 41 cents. There was a little bit of debate whether they sold or bought these between myself and the Rock Lobster. But either way, these puts are no longer in the conversation. XP obviously looking good on their earnings. The stock north of $23. So let's hope for the sake of the trader that they bought the puts, but then also own a boatload of stock against it, because I'm sure they'll take a nice dollar plus pop in the stock on their millions of shares against the 41 cents that they dropped here. But intriguing stuff nonetheless out here. But let's keep rolling, Mr. FLOWMASTER. Let's get out into one of your other names you were looking at today. There's another name we haven't talked about in a while. This is Chico's, ticker symbol CHS. You know them, ladies, fashion, and accessories. Trading 746. Another one kind of unched on the day. So like the rest of the market, kind of struggling to find its way today. But man, what a year has been in Chico's. A year ago, 668. So they're still up about 80 cents. Then they came for it almost immediately, crushed it in January down to its low for the year of about, well, it looks like they got down to about the low for the year, 433 in January. Then they rallied it again to about 6 1/3 in March. Then they sold it off again to $4.50 in May before rallying again to 620 in August. Then they crushed it for the third time down to around that same low for the year, 4 1/3. And then this chart, listeners, I think the ticker symbol is redonkulous because it is just straight up from a week ago. Actually, no, this is September, for about a month and change ago. It was trading 461 on September 27th. September 28th, it was trading $7.50, and it's been right there ever since. Obviously, this is the old emblematic chart of some corporate action out here. Mr. FLOWMASTER, sir, what did you spot out here in Chico's?
Yeah, so I dug around on this one, and it is a deal name. So there was, I believe, a private equity firm or something is taking them out for $1 billion, which looks like it works out to $7.60 a share, and it does look like, based on how that stock has behaved, it spiked and it pretty much flatlined. So it looks like the market is expecting this to happen. Stock's trading at 746. It's only a few cents away from that deal price, and so. I've never really traded merger arb names myself. I sat next to some people that did. It's a very interesting business because basically, that you look at this stock at 746. There's a very good chance it's going to finish at 760. That's kind of that's the deal. But there's always a chance of something weird happening, right? A deal can break or some other bidder can come in, and so what you end up with is this. A very significant kind of gap risk that some traders love to try to take advantage of. If you're, what we saw today actually looks like it might be somebody kind of hedging a position. So we saw a buyer of the May of 2024 7-strike puts, a total of 7,500 times, 15 cents on the first 5,000, and then 20 cents on the last 2,500. It's an opening position. This is not a stock that's going to move around. It's a stock that's going to sit here until the deal's supposed to close, and then unless something weird happens, in which case it could probably fall right back down to the $4 range, which is why somebody is buying these puts, because there's a slight chance of a break. It's the deal, the merger arb, business it's a lot of very closely following companies and really kind of reaching out to even get some kind of alternative information, like, keeping an eye on travel schedules of the executives and everything else. That really is part of that business, which I think is really kind of interesting. A little James Bond-ish. So, this one just jumped out because it's notable. I think it's important for listeners to kind of understand, that there's kind of different situations. There's situations where stocks are just going to wiggle all over the place. And then this is, kind of a whole different picture. It's a deal that somebody's hedging against a break, and kind of the predominant view looks like it is going to close. There's another really interesting one if anybody wants to dig into it in VMW. That is a company merging with Broadcom, I believe, and there's a Chinese approval required, and that stock has been all over the place. Volatility is up super high. Nobody knows nobody can figure out if that deal is going to close, or China's going to fail to approve it, or there's going to be some other change to the terms. So that's another interesting one I've been watching.
Can't you just picture Mr. Mr. Rock Lobster? I keep saying that. Can't you just picture Mr. Rock Lobster, the Flowmaster, with a pair of binoculars and a trench coat, following around a Chico's executive behind a bush, peeking out, watching them go somewhere, and then buying a whole bunch of puts on a deal arb? I could just picture that. And you know what? It just makes me happy, so I'm going to go with it. Mr. Rock Lobster, what are your thoughts on? Have you traded any of these deal arbs? Because you're right. I could see maybe taking the 7.5 puts on the fly, or the 7 puts. I mean, you got till May. It's a long time, but they're not getting them for nothing. They're getting them for 20 cents. And obviously, this thing's got to fall out of bed for this to really work. But what are your thoughts on these types of deal arb plays, sir? And have you ever followed anyone with a trench coat and binoculars?
Well, I think Henry's such a big-time player now. I think he would get like a Bud Fox to follow around the fun guys. He would get a minion. He would get a minion. The last arb I looked at was this spin out of Johnson & Johnson, I think, Clearview or K-View or something. And that has not worked out yet. I thought they would snap back. And right now it is, it's kind of doggy do, that trade. That has not worked out well. As far as I find it interesting, with Amazon and everything else, and, retailers not getting the best story, that somebody is coming in and paying cash for a woman's clothing retailer. I find it odd. Maybe that's why this person's buying puts. I guess maybe it's a bargain. I don't know, but and actually, this was one I traded during the pandemic because basically the stock was worthless, and it was kind of fun because it had like a mini meme action for a little while. It was a little bit fun, and that's the last time I looked at Chico's.
Oh, this was your Oatly before Oatly?
Yes, but it was actually successful.
Oatly up like 20% today.
A dime today.
Up like 20%. I don't know what you're laughing at.
I had to contact you this morning at 5:30 because there was so much glee.
That's how excited he gets, listeners. He hits me up at 5:26 a.m. to tell me about Oatly.
Yes. So, but yeah, I think Henry, this is interesting as far as, and they're buying a lot of time, or maybe I don't know if they're buying stock against this, but maybe they're protecting their deal, or maybe they're protecting a gain. I don't know, but you never know. Anything could happen with these things, but I just find the whole thing curious that they're kind of like, when was the last time somebody paid cash for a retail anything? I can't remember the last time there was a retail cash buyout. But.
Well, hold that thought, because we got one more to pay off here before we get to around the block here, because we're already come up against it. But I thought, since the Flowmaster's on with us, he's been talking about a lot of trades with us for a while. We got to start paying some of these off. Let's go all the way back to the August 24th, August 24th, the heady days of late summer. Who can even remember back that far, listeners? And speaking of retail and fashion and that kind of thing, this kind of hits on some aspects of that. It's his Foot Locker. So some people think of high-end sneakers as fashion. Ticker symbol FL. And let's see, a year ago, Foot Locker was trading around $31.50. They got all the way up to about $47.25. That was in February, right around February 2nd. So they topped out with a lot of the rest of the market. Then it's been kind of stair-stepping down ever since. By the time we talked about it, listeners, the stock was hanging out right at pretty close to, not quite as low for the year, but pretty darn close. It was trading right around 17 and change, 1786. And the FLOWMASTER at the time talked about somebody coming in and scooping upside calls, in particular the SEP 20s going up, hitting the tape 10,000 times. Paper paying anywhere between 25 to 35 cents for these bad boys. So, again, 10,000 contracts in big sweeps. Folks were really feeling themselves the upside out there on good old Foot Locker. And lo and behold, listeners, the stock's at $20 right now, $20.64, but didn't quite make it by September expiration. The stock ended up closing $18.31 on expiration. These calls were still open, so do the math, listeners. If you average around 30 cents and they dropped around 300 grand for these calls, all things considered. Mr. FLOWMASTER, I know you were all hot and bothered about Foot Locker a few months ago. What are your thoughts on these calls? Looks like withering on the vine, sir.
Well, I'm just wondering if maybe they reloaded or put the trade on again after they expired or something. I'm looking at the open interest.
That very well could be. We didn't go out beyond these. Sometimes
yeah,
they'll
so
again.
Because stock was $22 yesterday. It's funny. There was I was at a panel this week, and somebody mentioned somebody in the business said, we have sometimes a challenge because the journalists talk about options as a zero-sum game, and most options expire worthless, and then sometimes we see articles where they basically say options are a big waste of money, and then we have to educate people and try to show how it's a zero-sum game if you include stock, but I can buy an option from you, make money, it can go out worthless, but I can still make money if I'm gamma hedging or if there's other things going on in my portfolio. So, and in this case, the other thing I do like to point out is occasionally we'll see somebody come by a call as an alternative to buying stock because they like that defined risk. So the $300,000, maybe they did lose it, but they may have been much happier losing that than actually taking a stock position where, they kind of have the downside all the way to zero. And, it just might have been that might have been their scenario. They were happy with it. Or possibly they reloaded in some other long and did okay, in October. But it is an interesting one.
Interesting nonetheless. You know what else is interesting, listeners? What we're keeping an eye on because it's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's go around the block. Before we do that really quickly, we got all hot and bothered on the Monday show with our guest in the Tasty Trade hot seat. Their CEO, Scott Sheridan, brought up an interesting point about the updated interpretation of pattern day trading and how draconian it has become. It's effectively one strike and you're done for life, at least at that broker, listeners. So we asked you folks, quite simply, is the pattern day trading rule a necessary protection for retail traders or an outdated concept that needs to be updated or removed? And about 85% of you said yes, said no, it's outdated, and about 15% saying yes, it protects traders. Of course, in that 15%, we had a few folks like our buddy Mr. Vixologist, Mr. Jim Carroll, been on Volviews a lot, chiming in to say he thinks maybe some level of capital requirements for accounts is not the worst thing. So in the 15%, there are some interesting ideas. A lot of people push back on that, saying limiting people's liquidity is never a good idea. So it seems like our audience right now, pretty anti-pattern day trade. I kind of expected that, but intriguing to see the data nonetheless. Who's a huge fan of pattern day trading rules, just about everything else. He's Uncle Mike. He's a happy camper because the S&P's up quite a bit over the last few weeks. Mr. Uncle Mike, what are you keeping an eye on until the Monday episode? Are you looking for another, 5% in the S&P between now and then?
Yeah, why not? Let's just take care of it before Thanksgiving. No, just watching to see if this bond rally can continue. It'll be interesting to see if the buyers can keep moving this in the bond world. And that's probably the main thing with which I'm watching right now. And just looking forward to my Monday Thanksgiving joke.
Yes, we are all waiting with bated breath for Uncle Mike's one joke a year that we get here on the show. Rest of the time, very straight-laced, very buttoned up over here. Mr. Rock Lobster, same question for you, sir. What are you keeping an eye on through the weekend till the Monday episode?
Yeah, can we break through this 4,500? Can we get some happiness going to 4,600 before Christmas, or even just in the next week? I think this is a good level, or people, they look around and say, okay, the smoke is all clear. We'll keep taking it higher. So, and I'd like to see VIX start, or just volatility break down from this level, because we had such a steep move up. Generally, vol will break first before the rally happens. So looking to see if that actually comes to pass.
And last but not least, Mr. FLOWMASTER, you're not going to be joining us next week. No one's going to be joining us because, of course, it is Thanksgiving. There will be no show next Thursday. So you will be joining us again in 2 weeks, Mr. FLOWMASTer. What are you keeping an eye on for the next 2 weeks, sir?
Well, for the next 2 weeks, well, as I said, I think that we saw a dramatic, I actually called it a seismic sentiment shift in literally the last 10 or 11 trading days. And I'm going to be kind of watching for this exuberance. Once everybody is in and long, that's when all of a sudden people get really, really nervous. So I'm going to be kind of overriding lots of the core holdings I have because I'm pretty happy with the performance this year for the market, and just continuing to keep an eye on the 0-day phenomena. And all the other interesting things going on in our business.
All right, listeners, that music means we've come to the end of the old OB, but not the end of our content. Certainly not if you're hanging out in the pro hangout there. We'll be back in a little bit to break down all the action on the futures options front on This Week in Futures Options, so stay tuned for that. If you're listening on demand, of course, keep an eye on wherever you get this show on the on-demand side, and it'll be hitting there probably later today. But before we do that, let's go around the horn. Mr. FLOWMASTer, we got a whole 2 weeks until we chat with you again. So in the meantime, folks have a lot of time to kick the tires and light the fires over there for some good old trade alert and CBOE data. Where should they go? What should they do, sir?
Just head over to cbo.com/RMA, which is Risk and Market Analytics. We've got all our platforms there. And yeah, I think I think it's going to be kind of a quiet period. Obviously, usually the Friday after Thanksgiving is the slowest day of the year, so that's what I'm expecting. And I think it's going to be interesting to see how the rest of the year plays out.
In the meantime, keep tabs on all the latest FLOWMASTer goodies over there, cbo.com/RMA. We'll see, listeners. We'll see if we could twist his arm into getting that trade of the day report out for you folks, because it is cool stuff out there. And speaking of cool stuff, maybe he's got some. Let's find out. Mr. Rock Lobster, sir, what cool stuff do you have for our listeners out there?
Big announcement. My weekly profit cycles, which is wildly profitable and weekly, is moving back to Option Pit. So that will be coming back at the end of the month. Come on over, check us out. You get 10% off if you heard this show.
Where was it before?
It was at Money Map Press. We were doing a marketing thing with them. But I am no longer doing them, and I'm taking the product back because it's too good.
It's too good to give to those folks. I want it.
Yes.
If you want
but I am grandfathering all those people over, so they are getting a goodie. I'm a soft guy. What can I say?
There you go. So if you want to get the goodies that are too good for those other scrubs, you want to get them for yourselves. Only one place to go, listeners. OptionPit.com. The place to go to kick the tires and light the fires. And once again, because he demands it, it's in his contract, listeners, he is the last one to go. The uncleest of Mike, Mr. Uncle Mike TOSAW. Sir, the spotlight is yours. As requested, what do you got for our listeners?
It's not my fault I'm a good negotiator. If you are looking for a financial advisor who does delve in the option product, if it's appropriate for the client, of course, feel free to check out my website, stcharleswealth.com, or you can follow me on Twitter at Mike TOSAW, TOSAW.
There you go. Give him a follow at Mike TOSAW on the old Twitter machine. That is going to do it for the old OB today. Remember, you want to kick the tires and light the fires on all the cool stuff we have cooking. TheOptionsInsider.com/pro, the place to go. That'll get you access to the live, so you can stay tuned for TWIFO. Also, all of our pro folks heard the return of Options Playbook Radio yesterday with the options guy himself. That right now is exclusive to the pro podcast feed. That'll probably be coming down the road to you folks on the network in a bit once we sort out some details there. In the meantime, you folks already got it on the pro side, theoptionsinsider.com/pro. Early releases like that, exclusive shows, live streams, and we give you guys a whole bunch of stuff that's worth a boatload of money. Theoptionsinsider.com/pro. We got to get on out of here. Back again in a little bit for This Week in Futures Options. Back again tomorrow, noon Central, 1 p.m. Eastern for Vol Views. Back again after that, exclusively for you pro folks, for a little bit of the old options oddities. And then back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.